Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at the market this morning, a little bit of a sell-off after some AI news came out over the weekend. The Nasdaq is down nearly 4%. The S&P 500 is down just north of 2%. NVIDIA falling about 12%. And really any stock adjacent to the AI space is down anywhere from 5 to 20%, depending on how impacted it might be by this new AI model out of China called DeepSeek that runs just as well as some of the a lot more expensive United States-based models and was trained at a fraction of the cost. That's really the key part over here. It's like, yes, it's a model that's new, it's running well, but the main part is that they trained it seemingly for almost no money at all using older chips. And again, there's going to be questions around whether or not that's true, whether it's China just sowing dissent around what the United States is trying to do with their investment cycle, because on the other side of things, China just announced a $140 billion investment into AI businesses. So if they can do it that cheaply, and again, this is a startup in China, not China itself that's doing this new AI model, if they can do it that cheaply, why that massive investment cycle? Because maybe there's just something off behind the scenes. However, the market does always have a visceral reaction to news like this, and that's happening right now because this does threaten the massive investment cycle in the United States, and that's going to hurt certain companies if this is really true. If American AI companies can look at the open source model in China and see that they're doing something that actually does cut the cost of training by a significant amount, it does cut the need of the latest and greatest in AI-based chips by a significant amount, and maybe it even cuts the cost and need of this massive data center built out and compute power that's needed to currently run these AI models. Maybe, just maybe, this changes the face of AI. And while that might benefit certain companies, it certainly hurts certain companies. If you look at NVIDIA, NVIDIA is priced pretty aggressively, 56x multiple on a trailing 12-month, 36x multiple on a next 12-month basis. And it assumes pretty significant growth for years and years and years to come, right? That the idea is going to be that NVIDIA is going to release newer and better chips every 2 years or so. People are going to buy those chips because they need massive power to run these AI models. And until last week, that was sort of true. But now with this new AI model, maybe it's not. Maybe the iterative power of AI development is happening quicker than expected, and now you're going to look at AI a couple months from now and say we can do this at 10% of the cost we thought we were going to be able to do it a couple months ago, and we're going to need 10% of the computing power, 10% of the chip power, and that impacts everything. It impacts NVIDIA because people are not going to buy as many of their chips as they thought they were going to need. People are not going to need as much data center power, which impacts businesses like Amazon, Microsoft, Google, any cloud business that is currently building out a ton of data centers to run all of this inference and training for AI. It impacts smaller businesses like CoreWeave, Nebius that do the same thing. It impacts power companies like Constellation Energy, like Talon Energy, who are kind of driving the power revolution, sort of this new thing that we need nuclear power again because of all of the compute and energy power that is going to be needed to run these AI models. It impacts all of the businesses that work with the chip makers like TSM, like AMAT, like LCRX, KLAC, etc. So across the board, you're seeing a big downturn in anything that's AI related because of the worry that suddenly the paradigm is shifting a little bit, and what we thought we were going to need just a couple of weeks ago is not anywhere close to what we're going to need in the future, into the negative side. So if we thought we were going to need, thousands and thousands and thousands of megawatts of energy and compute power, we're going to need a fraction of that now. We're going to need a fraction of the data centers. We're going to need a fraction of the chips. We're going to need a fraction of whatever to run all of this AI stuff. And that could be a benefit to certain companies. You look at a company like Meta, for example, that sort of has their own AI platform, only down 2% this morning because maybe, just maybe, they're not going to be as impacted as some of these other companies. But you look at something like Microsoft, down about 4%, a bit more, because they have a cloud business, and maybe cloud's not going to grow as quickly as it was expected to grow, simply because, hey, maybe we're going to need a lot less compute You look at a company I just went over a couple of days ago, NBIS, down 15% because this is fully a compute-based business. And if computing gets commoditized much quicker than expected because the power needs are a lot lower, then maybe, just maybe, these stocks aren't going to be as valuable as people thought they were going to be. And again, this is very much a visceral reaction to news that came out over the weekend. There'll be more news out pretty soon that says maybe, just maybe, this AI program isn't as efficient or as cost effective or whatever as this company is saying it is. However, if it is, then potentially this AI bubble isn't going to burst by any means, but the valuations are going to come down. On the other side, though, this might benefit companies in a way. Even Microsoft, which, yes, their cloud business might be hurt a little bit. They do have OpenAI or an investment in OpenAI. Maybe the investments needed to run that business will come down substantially. They're spending a ton of money on CapEx. Meta is as well. Google is as well. Amazon is as well. Potentially, they'll need to spend a lot less money on these latest and greatest NVIDIA chips. They can build less powerful chips in-house and use those for both training and inference. They can buy older chips or less powerful chips, cheaper chips from other companies. And while that certainly hurts NVIDIA, it might make the AI infrastructure a lot cheaper, which might in turn suddenly make AI a bit more of a profitable business. Because right now, if you look at Microsoft, if you look at Google, if you look at Meta, they're investing a ton of money into this ecosystem and basically making little to nothing out of it. Like the amount of revenue that's being brought in from AI right now is very, very low, but the cost is very, very high. So if you can get that cost from very, very high to a lot lower than that, maybe, just maybe, the payoff will become a lot quicker for some of these companies. It'll certainly hurt NVIDIA and anybody who benefits from the NVIDIA ecosystem. So, chip makers, companies that help those chip makers make those chips, anybody that provides materials for those chips, etc. Probably a negative there, maybe a slight positive for companies like this. And on the compute side, yes, compute power per hour might come down, but the cost of building data centers and, more importantly, getting the chips into those data centers that help with AI will certainly be a lot less expensive in the scenario that whatever DeepSeek is doing is actually efficient, affordable, and less compute intensive. That's really the question right now. Again, the market's going to act really quickly when news like this comes out. Is it the right move? Is it the wrong move to buy or sell today? Hard to tell right now because the information just isn't there. It's very surface level at the moment. It seems like it's a lot better, but who really knows? Did they have NVIDIA chips behind the scenes doing a bunch of the work, even though there's export and import restrictions? Did they get them somehow? There's been some news stories that said, yeah, they're actually using NVIDIA chips, so it's not that big of a deal. But if some of these American companies can look at this and say, well, we can learn something from this and we can make our stuff a lot cheaper, and maybe our dependence on these chips is a bit too much right now and we don't need as many NVIDIA chips. That's going to hurt NVIDIA for sure, companies that depend on NVIDIA, et cetera, but it might benefit some other companies that are making AI models and now can make them cheaper. So those are my thoughts. Again, this is not investment advice. Do your own due diligence. This is just a quick reaction to what's happening in the market. Again, this could be something that happens quickly, recovers, or maybe a multi-day thing, and this could lead to some opportunities. I think, if some of these like AI providers, especially ones that are spending a ton of money on CapEx right now, start selling off in a big way, if suddenly Meta's down 15 to 20%, could get interesting. Same with like Google. Google's already kind of interesting, but Google, Amazon, et cetera, if those companies sell off more than just 5% today, if they sell off 10, 20%, whatever, could get interesting. With NVIDIA, I think this is more of a wait and see approach for me. I do own shares of NVIDIA. I actually own shares of most of these companies that I've mentioned. So keep that in mind. Again, not investment advice, do your own due diligence, et cetera. But for me, NVIDIA is a bit more of a concern for me because it is priced for perfection in a way. This is a $3 trillion company already, even after the 10% dip today. What's the upside from here? It's like, is it going to be a $6 trillion company so I can double my money? Or is there potentially more significant downside because of the risk of just people being less dependent on these chips? I think AI development could be faster than expected, and this just proves it. I think the worry for investors now is the AI cycle going to happen quicker? And if it happens quicker, if stuff becomes commoditized quicker, if the dependence on certain chips and certain products becomes less and less and less faster than expected, a lot of these companies who could drop substantially. And I think NVIDIA is certainly at the top of that list. And a lot of these compute providers are certainly at the top of that list. So that's the risk you're taking with buying some of them. But those are just my thoughts. Let me know what you think about the drop. Are you worried? Are you buying? Are you selling? Any interesting opportunities out there for you? Comment down below. As always, like, subscribe. See you later. Bye.